Hey, what's up, everybody? It is Wednesday, April 22nd. How's everybody doing? I hope everybody is well. All right, let's talk about what's going on. Nice rally today. We recovered some of the lost ground from yesterday. By the way, yesterday's sell-off, put-call ratio hit the highest level in 3 weeks, 1.09. Now, we've had a bunch of days now with the put-call ratio below 1.0. So that kind of tells you some optimism is building in, some positive sentiment. You know, we got to watch that. If that comes down too low, that'll give us a sell signal in the market. This is all technical stuff. Obviously, you know, I concentrate mostly on the fundamentals, the macroeconomics, basic conditions in the economy, and I look at the fiscal stuff. And the fiscal stuff is blowing through the roof. I mean, today, the numbers today were up $540 billion in spending over where we were at this time last year. You know, we're at 3.4 trillion right now. That's 504. Now, normally, let me just put this into perspective for those of you who, you know, haven't been following along or you haven't followed me before. Last year was a record for the fiscal year 2019. We ended up something like 300 billion over the previous year. And that, you know, the fiscal year ends on September 30th. So last September 30th, total spending for the fiscal year was up like 300 billion over the previous year. We're already up 540 billion. And we have what? May, June, July, August. We got 5 months left to go. We're already up 540 billion now over where we were last year, and last year was a record. Unemployment benefits now 40 billion. That is up 24 billion over the same time last year. Now, for the last 11 years, okay, for the last 11 years, 10 years, unemployment benefits have been down every year compared to the previous year. And that's normal because, right, jobs were growing, employment was growing. Now we have this huge surge. So, you know, we hate to see people out of work. I hate to see people out of work, but at least the money's starting to flow out there to give them some level of support, of financial support, and more is going to be coming. So it's like a tsunami of fiscal support. And again, it's just the beginning. A lot of people haven't received their $1,200 checks. And there are more fiscal stimulus bills in Congress. I mean, another one was just passed the other day for $500 billion, which that was loans for the SBA program and some other stuff. And there's another one now in consideration. Mnuchin, Treasury Secretary Mnuchin, was talking about this. And this one I like because this is going to include infrastructure. It's going to include a payroll tax cut, which is essential right now. I mean, taxes, I know a lot of people are not working and they're not able to pay taxes, and you know, tax filings were put back to July. But for those people working, the payroll tax, you need some relief there. Need some relief. And that is in a fourth stimulus bill that is you know, being formulated right now. So the fiscal is very strong. I'm still positive on the stock market. Today we're up close to 500 points. We gave a little tiny bit back at the close, but it's still looking good as far as I could see. Now, let's talk about oil, because this has been the big story, right? Negative $40. Well, today we were positive, I think around $14 on the June contract. This USO, this oil ETF, remains the focus, but I said this the other day, and this, you know, I don't know if they're going to end up having to liquidate all that. I don't know they're doing a reverse 1 for 8 or 8 for 1 split. That's usually a sign of somebody in trouble when they do reverse splits. The stock price is too low. They're trying to jack it up. But the problem with USO is the structure of their strategy, right? I mean, the market is in what's called a super contango, you know, very low spot prices, and then prices rising along the curve. And every month when they have to roll that over, they're paying a huge premium. So the decay in that security is enormous. That's why even if crude goes up right now, that USO is going to go nowhere, just because of the slope of the crude curve. The oil curve is too steep. I'm not a fan of ETFs. If you want to play commodities, learn how to trade futures. Or you can buy a stock, an equity that is in that space. I mean, if you like oil, if you're bullish oil, you can buy ExxonMobil, you can buy Valero, you could buy Phillips 66, you could buy BP, you could buy Chevron. I mean, there's a million of them. That's another way to play it. But I want to talk about the EIA Weekly Petroleum Status Report. You know, that comes out every Wednesday. I do a special in-depth analysis. All my subscribers get that. By the way, look at gold at 1736 today. We bought yesterday at 1670. We waited patiently. I mean, what was gold? Up around almost 1800. Everyone was jumping in, every headline bullish. That thing started to come down. I kept telling my people, 1670, bought at 1670, it's at 1736. So that's a nice, 76, almost $66 profit on that. A $66 move. Let's talk about the EIA, which on first glance, it was bearish. And I'm not saying, and not even on first glance, most of it was bearish, but there was maybe some little green shoots in there. You know, little green shoots, when you plant something and the little sprouts start coming out, right? Little optimism, little hint of growth, whatever. And that was in gasoline demand. We had the biggest increase in gasoline demand in 5 weeks. All right, it's at a 3-week high right now. That's nice. It's 2 weeks in a row we saw an increase in gasoline demand and an increase in distillate demand. Biggest increase in 6 weeks in distillate demand, and that is also at a 3-week high. And another thing, crude oil imports dropped to the lowest level in 28 years. So why is that important? Because, you know, we got enough problems here domestically with production and the amount of inventory. You got to get those imports down, and they are way, way down. And let me talk a little bit about U.S. production. It only dropped by 100,000 barrels a day. Now, the EIA report was through last Friday, that's April 17th. So it does not reflect the negative prices that occurred this week so far. I'm assuming we're going to see a bigger drop in domestic production in next week's EIA report. But so far, domestic production has dropped 900,000 barrels a day from the peak. We went from 13.1 million, we're down to 12.2 million. It's still high, but like I said, imports are way, way down, and we got little green shoots. And don't forget, OPEC cuts start in May. All right, 9.7 million barrels a day cut. What else? The economy, some places are starting to open up. I'm even seeing taxi cabs on the street here in New York City. Not a lot, but they're here. I didn't see them like a few days ago. But other places, other states, we're not scheduled to open up yet here in New York. Maybe, I don't know, May 15th, I think is what our governor said. But some places are starting to open up. So, evidence of a pickup in fuel demand. We're going to have cuts, OPEC cuts coming in May. We got domestic production going down 900,000 barrels a day so far, and it's going to drop probably at least another million next week when we see it. Maybe not a million next week, but a few 100,000 at least. What else? Economy starting to open up again. I think I said that. So all this stuff. So that's where we stand. I mean, you got to go with the, like I always say, you know, it comes down to basic conditions. We're not trying to forecast the market. We're trying to forecast basic conditions because that will dictate what is going to happen to the market. That's what it boils down to. All right. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. You got to use the concepts and the understandings of MMT to invest and trade in the markets. All right? All right, everybody. Stay well. See you tomorrow. By the way, the link is right here in the description, as I always say. If you like this, subscribe. Bye.